Hello friends, a very warm welcome to my channel. In today's video, we are going to analyze a public sector undertaking which is into defense, railways and other interesting sectors. We are going to talk about BEML, which has come into the limelight post-COVID because the government is focusing a lot on defense, railways and these sectors. It has already given a massive rally and good returns to its shareholders, but going forward also, the order book of this company looks very strong. Before we move forward, if you are new to the channel, please do subscribe and hit the bell icon to get updates of all the new videos that I upload. This is a small disclaimer as per SEBI regulations. You can pause the video and read it. This will be the flow of our discussion. We'll talk about the business model of BEML in brief. We'll look at the chart. We'll understand the financial performance of the company in the last 5 years. We'll understand why the stock has given a sharp rally recently. We'll talk about the outlook of the management going forward. We'll understand the risks, valuations, and then form an overall view about the company. BEML was started in 1964. It's a public sector undertaking under the Ministry of Defense. Earlier it was called Bharat Earth Movers Limited. So this company primarily works into three segments. The first is the defense and the aerospace. The second is the mining and construction space. And the third is rail and metro. So how does it make money? It makes money by manufacturing several products, selling them to other public sector undertakings, the Ministry of Defense, as well as private sector enterprises. It also has maintenance contracts for the products which it has sold. It also sells the spares and parts and gets revenue out of it. Now, why are these sectors into the limelight? Because looking at the geopolitical situation, all the countries across the world, including India, have increased the defense spending. The budget has increased for this sector, and government is also very keen on increasing the rail connectivity in India, modernizing the railways, and the metro trains across the different cities are also increasing day by day. So this company works in all these sectors. This is kind of a order book driven business because the entire line of products what they make are customized. If you look at the broad split of revenue, the defense and aerospace constitute about 27% of the revenue, rail and metro constitute about 19%, and the mining and construction about 54%. Now this mix changes every year, and going forward in FY26, the company expects that the defense revenue which they have done in FY25 may even go to the extent of doubling it. So by this, you can understand the tailwinds in the defense sector. These are the in-house developed products by the company. Recently, they have developed a 1500 HP engine, which is used for battle tanks. So earlier, this was imported in India and used in our tanks. And now we have made it in India itself. Then you can see the bulletproof vehicles, minefield marking equipments, self-propelled mine barrier. So now this is a vehicle which installs landmines for the war, trolls for the battle tanks, armored repair and recovery vehicle. So by looking at these, you understand the complexity of the technology involved and the kind of products this company is making, which is not easy for any newcomer to develop. When you talk about the other segments other than the defense, they are making the Vande Bharat trains, they are making the metro cars, they are making electric trains. In the mining segment, they are making bulldozers, motor graders, rope shovels. So these are the kind of products which this company makes. When you talk about the accomplishments of the company, they have done huge work in the past. In the defense, they have delivered more than 9,350 high mobility vehicles. In the rail and metro, they have delivered more than 18,000 coaches till now. More than 33,000 mining equipments have been delivered. And they have exported to more than 72 countries. So that is the scale and competency we are talking about in this company. Now, when you look at the chart, the stock was in a long-term consolidation until COVID. It used to consolidate well below the 2000 range for a very long time. In fact, up to 2023. But post that, as the orders drastically improved and the margins expanded, the stock gave a breakout up to 5,500. But it could not sustain at that level for a very long time, and we saw a sharp decline towards the 2,300 zone. And now, recently, when the defense stocks came again into the limelight with the Indo-Pak war, and the aggressive order book which the company got, the stock again gave a rally up till 4,400. In terms of revenue in the last 5 years, the growth has not been very impressive. They did a revenue of about 3,500 crores in FY21, and still up till FY25, the revenue still is around 4,000 only. So the growth is not at all impressive in terms of revenue. But EBITDA has increased from 178 crores to 500 crores in FY25. Now, why this has been possible? Because of the margin expansion. The EBITDA margins have expanded from 5% in FY21 to 13% in FY25, and the management expects that these margins will further expand by 150 basis points in FY26. The return ratios are not that impressive. The ROE is just about 10.5%. It's a high working capital business. The inventory levels as well as the debtors are very high, but the cash flows are pretty decent, and that's why the debt is not very high in this company. Now let's talk about an interesting event which happened in this company recently. There was a demerger of a company called BEML Land Assets. So first there was a subsidiary incorporated in the company in 2021. Then all the non-core assets of BEML were transferred to that subsidiary. As the government wants to disinvest these assets, they moved it to another company which was a wholly owned subsidiary, and then that subsidiary was demerged from this company in 2022. Now gradually all these assets will be disinvested. So this helped BEML become more lighter in terms of their balance sheet, and this will also help them improve their return ratios. Now, what led to the sharp increase in the stock price recently? The defense sector was back into the limelight with the Indo-Pak war. The rail and metro business again is seeing very fast expansion. There's Bangalore Metro coming up. So there are huge orders expected to flow from there. The rail network is under continuous expansion. So the order book overall is at an all-time high. And in fact, in FY26, the company expects the order book to further be much higher than FY25. And margin expansion also led to the increase in the stock price. So you can understand that this is a combination of both fundamentals as well as the sentiment in the market. So before we move forward, if you're not a part of our Telegram channel yet, do join today by clicking the link in the description so that you join the correct Telegram channel. Every day before the market opens, I share my views on the market. I also share some portfolio allocation strategies, important news which can help you improve your returns. Now, what are the growth plans of the company going forward? They are right now at their all-time high order book of 14,600, and going forward by FY26 end, the management expects this order book to increase to 23,000 crores. So that will be more than 5 times of their revenue in FY25. They have recently developed a high mobility vehicle which is HMV 12x12. This is for strategic weapon systems. So this is used to carry critical weapons like missiles, etc. They've also developed a self-propelled mine barrier. So this is a machine or an equipment or a truck which is used to lay the landmines on the battlefield. Then, as we have discussed, they've developed a 1500 HP high power engine. This will be used as an engine in the war tanks. They have supplied their first Vande Bharat train, and they are also in process of supplying the bullet trains. In terms of guidance, they are guiding for 20% revenue growth on a conservative basis in FY26, and the defense business will lead the growth. They have planned a 600 crore capex in FY26, and they expect the margins, the EBITDA margins, to expand by 150 basis points on top of the 13% in FY25. So you can see that the order book is pretty strong and the overall growth plans are strong. The order book has also seen an increasing trend compared to the earlier years. Now let's talk about another critical part of our analysis, which is the valuations. The stock is trading at a PE of about 63 and price to book of 6 times, EV and EBITDA of 35 times, and market cap to sales of 4.5 times. So the valuations on face of it are not at all cheap. The growth in the last 5 years is not at all impressive. The only reason for profit increase is margin expansion. Then why are the valuations so high? Firstly, because the company is working on all the sunrise sectors. They have innovative technology, niche technologies, and their order book is very strong. So although the past performance has not been that impressive, there is a high chance that the next 2-3 years would be bright for the company. That's why the valuations are on the higher side. But it is up to you and me to judge to what extent the valuations have priced in the future growth. Now, when you talk about the risks of investing in this company, a lot in these sectors like defense, railways, mining depends on what the government is deciding in the budget, beyond the budget, how the public sector undertakings are behaving, how the Ministry of Defense and Indian Railways are behaving. All these regulations impact the business of the company drastically. It could be a lumpy business which may do very well because of the orders in 1 year and may be dull in another year. Historically, the performance has not been that great. The revenue has shown negligible growth in the last 5 years. Getting orders in one hand is good, but execution is very important. So we have to see whether the orders get executed in the next 5 years and the money is received in time, inventory is managed in time. So when all these things align, then only the company will perform better. So now that you've understood the business model of the company, the valuations, the growth aspects, the financials, the risks of investing, what is an overall view on the stock? If you are holding the stock, you should continue to hold and see whether the management delivers what they are saying in FY26. And the likelihood of doing that is pretty high because there is a strong order book in their hand. But if you're looking at a fresh entry after the recent rally, you should try to give some time for the stock to cool off and then maybe accumulate in a staggered manner. And what are the things which you will monitor post buying? You will monitor how fast are the new orders flowing, how fast are the old orders being executed, and whether the inventory is managed efficiently and the receivables are received in time. So if these things are going pretty fine, then you are good to hold this company for a decent long term. So that's about BEML. I hope you like the crisp analysis. I've tried to cover only the important points in this short video. If you like it, hit the like button and subscribe to the channel. If you want me to make videos on your favorite stocks, do mention the names in the comment section. Even this we have picked up from the last videos. Don't forget to join our Telegram channel by clicking the link in the description button. It's a free channel. Thank you for watching and have a wonderful day.